Okay, this lesson is another bite-sized lesson, a very important one, identifying key SR. So, as you know, as price action traders, the most important thing is support and resistance. Okay, yeah, it's simple concept of buyers and sellers, supply and demand, and we're going to go over that today. Okay, so let's jump into the chart. So let's take a look at Euro USD. So some key rules, okay, when using support and resistance is price recency. And what do I mean by price recency? So price recency is we are trying to focus on working from the right side of the screen to the left. Okay, so I'll give you an example. Okay, so over here, what we can see price is range bound. Okay, there was a drop and it pulled back. We're on the daily chart. Okay, and we can see in here there was support. Flips becomes resistance, market trades away. Okay, this was 2 years ago. Okay, we can bring that over. Okay, and we can say, okay, well, this was support 2.5 years ago. So if price comes back down to it, we'll look for longs. Not for me. I like to use price recency. So the most important thing for me would be saying, okay, let's work from right to left. Okay, here is in here, there's resistance, it'll break, and once price breaks up above for the second time, holds the support, pushes away. Okay, so that for me, if price was to trade back into it, I would be looking for the market to either find support or lose resistance and sell. Price recency. Okay, simple concept. So let's come on to support and resistance. So how do we mark support and resistance? What I try to do is get as many touches as possible. So let me give you an example. Um, we can say, let me give you an example. An example would be here, okay? So what we're trying to identify is we can see on the chart, first and foremost, key swings. Okay, and today we're just focusing on horizontal support and resistance. I will do a bite-sized lesson on dynamic support and resistance, which is trend walls or channels. Okay, um, but today just horizontal SR. So what we can see is what we're trying to identify is key swings. Okay, and we can see here big key swing, 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 um, big key swing, big key swing. Okay, so let's work with this area of price. Okay, and most important, second most important rule behind price recency or with price recency, they're not mutually exclusive. There are some really important rules. High time frame support and resistance is holds more weight than an M1, M3, or 5 minute or 15 minute support resistance. Okay, so it's generally stronger the higher the time frame, the stronger the support resistance. Okay, so we always work from top down, and generally I work from monthly, weekly, down, daily, down to H1, down to M5. Okay, today we're going to be on the daily. So let me just go back to the most important thing when marking SR is uh, you're looking for as many touches as possible. Okay, so what we've done, as I just mentioned, we've identified there's a key swing here. Okay, so where did price reject from? And if you focus on, rather than thinking that these lines are magic, just focus on the price, okay? So the price here is 1.1237. So at this price, it was very interesting area that sellers wanted to do business at, okay? So they sold the market away. And as it came down to 1.077, over here, 1.077. This was a very interesting area of price for buyers. So they'd stepped in, and then you get the demand, okay? Supply, demand. Now, how do we mark SR? So I look for as many touches as possible. So Yes, we've identified the key swing. Is this a correct? No, for me, that's not. Why? It's only one touch. So what I like to do, because I bring in concepts like failure patterns or traps, I go back a little away because we know here, just looking at this, we know the market pushed in here and we had a really bearish pin bar, but it tried to trade into it again, and we already know that we have some sort of resistance in there. Yeah, there was resistance in there because it pushed away. Tried again, falls away. So in this area there is SR, not just at this key swing. It's uh, been resistance each time it's pushed into this particular price point. So it's not as important to mark the literal top of the swing and the literal bottom of the swing, looking for as many touches as possible. And this is how I mark it. Everybody does it differently. So what we now have, if you look a little bit closer, is I have SR marked, and you can see a failure pattern as well. Okay, so we have resistance, bearish pin bar tries to break out again. As we said, this is resistance. What happens when resistance becomes support? What happens when resistance breaks? It should become support. Breaks, loses it, retests here, sells off. Okay, so that for me is is key resistance. Now, as price is unfolding, because we're working from, uh, we're imagining this, we're not doing this in hindsight, okay? So I would have this level dragged across. Market trades away. I know if it comes back to it, it's probably going to find it should react, okay? Doesn't have to sell off. It can, as it done here, it broke above, pushed away, didn't retest it, trades back below it. Once it closes below, trades below, retest, sells off. So we now know, yes, this is key high time frame SR. Okay. Now, key swing. See here, we don't have, we can't mark it the same as we mark this, but what we can do is use, because it's, it's only one little swing and it bounces. Yeah. Here, price built up in this range, and then this is where it sold off right here. Okay. Whereas here it's just gone, drove into 1.077 and immediately bounced. So in this instance, I use the I would use the absolute low. Okay. This one is different. And that's very important to identify the environment in which you use SR. Okay, and different types of SI. It's all the same, but it's just the way you mark it and the way I mark it is a little bit different. Okay, so now if we bring that across, we can see, oh, you could say, okay, well, that didn't work very well, but that's not the point. The point is we know buyers stepped in at this price. It was interesting for them. So you bring that across, price is unfolding, boom. Failure, gets back inside, closes, retest support, support bounce. So now we have high time frame resistance, high time frame support. Yes, we have, failed to break. The what you're looking for when marking SR is you want the main body of price action to be within. Okay. Yes, there was a big spike here, but it had a lot to do with the market conditions at the time, which was COVID. Okay, and so market went very, very volatile. And but the fact is, you can still mark SR. And that's the wonderful thing about price action, okay, and support and resistance. Doesn't matter what is happening in the world or in the markets or in the economy, there will be supply and demand, and there will be areas of price where buyers and sellers step in, okay, which creates support and resistance. So we bring that across, okay. We can say, okay, boom, that's working lovely, and we can look for trades off the level, or we can look for it to break and sell into liquidity. Okay, so now we have SR, we're dragging it across, prices unfolding week by week by week by week. And you can see here, boom, 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 retest 1, 2, 3. Okay, the weaker, the more tests SR has, the weaker it becomes. So what you want to see now is price moving away. Okay, yes, it has took some lows out. There are other concepts we use that can help us decide where, when, how wide to build a trade idea. But generally speaking, you want to start seeing price move away after this many touches. If not, expect or assume and don't be surprised of it breaking and becoming resistance. Okay, in this case, we get a bounce. Okay, but as you can see, everything originated from this area. Buyer stepped in here, boom, big swing. Weeks and weeks later, price trades back. It's support again. Support, support, it holds. Okay. Now, so what we have here is you can see, as we were identifying, key swings. Okay. This is a unique example, but generally, key swing, key swing, key swing, key swing, key swing. We know we've got support. Why is the market being sold off here? Because resistance. Okay. So we get to mark out this high. Okay, and I'm using the first one. Second one had a retest and sold off. Don't have to use the absolute peak. It's much of the same. Okay, but I'm just using the first one. It had a nice retest and dropped. You don't have to be too perfect with everything. Okay, that's most important. Don't try and be too perfect with it. Comes back, trades in the same price, takes the high, resistance. Comes back, resistance, but then we get the higher low. Yeah, so the structure, it doesn't, if in this instance, if it came back, you would say, whoa, this is in trouble now. Yeah, but it didn't. It went for a force because we had original anchor. 1, 2, 3. It had his first retest with the higher low, breaks, trades away. Okay, so um, we now have resistance, support. We have a little range formed. Market breaks out. Bringing our higher time frame resistance over, we know we expect price, if price is now broken out, we expect it to trade into it. So that can be used as a target, or that can be used as an area where we want to work with when price arrives here. Okay, it completely smashes through the level. We get a retest, price trades away. Price is unfolding. Big break, assume continuation of trend. Does it hold support? It breaks it, but it trades straight back inside the next day and holds support here. Okay, then as you can see, moves away. So what we have now is we're just looking at the daily chart. Okay, we have a failed break of support here. Yeah, that's all that is. It's a trap. Bears, sellers came in, market pulled back, moved away, trapped them. Buyers came in, support didn't hold, trapped them. Sellers came in, trapped them. Market traded in the opposite direction. Same, these 4 grey boxes are the same. Most important thing we focus on today, though, is resistance. Resistance becomes support. Trades away. Support, 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 support. Resistance, resistance, resistance becomes support. Trades away. Now, let's drop to H4. Leaving our levels on. Okay, and now you can see what happened when. You can refine this a little bit to make sure we get a nice touch in there. Okay, you can see now even cleaner. We had this little range form. Market found support here. There. Okay, resistance, tries again, drops, retests support, breaks it, becomes support. Resistance, breaks it, becomes support. Market trades away. Okay, really clean levels. And if we're focusing on price action, current price action, what would I be looking for? Well, we know we have, how would I mark this? I would mark this using that body, as many touches as possible. We had one H4, a second H4, we dropped this to the H1, And I probably on the H1 I would do it, I'd mark it like this. Okay, so 1, 2, 3, 4. Yeah, it's touched it as many touches as possible, so we know that the level exists. So it's a key SR. So now we know we have resistance, and probably, I think I'll be looking for something like, I'm trying to work from right to left, but it's quite messy in here, isn't it? Let's have a look on the H4. What we got? M30. Okay. Sometimes the level gets a little bit cleaner if you go a little bit lower. You might be able to find a cleaner level to mark. So we have, um, yeah, take it back to H1. Buyers were coming in these areas, okay? So I think what we have is something like this. So we have resistance gets flipped, support gets a little bit messy, but holds the level, trades away, trades into it, support, support, bounce. Okay, something like that. So I know now I want to do business at these two levels. If it approaches this level, I'll look for a pattern to trade it higher or a break to sell it lower. If it pulls back to this level, I'll look for it to break it and trade it higher. Okay, and of course, as you go lower down the time frames, there's going to be various SR from day to day price action. As an example, we have a nice one here because this was a key swing. Okay, key swing, boom. Buyers stepped in here. You can see failure, support, trades away. Yeah. Then you have um, support, 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 break, trades away, trades into the level, breaks it, little failure above, underneath, resistance, drops. Okay, nice clean SR, resistance drops. Okay, so what the best thing for you to do now is go and practice on one of your favorite charts and identify key SR using the three main rules, which is work from right to left, go from higher time frame down to lower time frame, and maybe color coordinate. Will be very useful for you. And a great habit to have is every weekend, see this little trash can here, delete, and you mark your levels up nice and clean again. Okay, because we're working with recency. That's the most important thing, and that's why we do our Monday recording and we go over the macro FX top-down analysis, and then we work day to day using our concepts, intraday concepts. Okay.